Hi, and welcome to the Stockscores Market Minutes for August 29th, 2014. Breakouts are a very simple technical analysis concept, but one that is very important and yet often misunderstood. Many define a breakout simply as a move through a past price ceiling to a new high. So if a stock stalled at $10 a few months ago and then now breaks through that $10 mark, some would call that a breakout. I would say, however, that there is more to a breakout than this simple definition. You see, how a stock behaves before it breaks through resistance has a huge effect on how the stock will move after the breakout. If you buy any breakout, my sense is you won't do all that well. You need ways to qualify whether the breakout is truly healthy. How was the stock trending before the breakout? And is the stock simply breaking out but still within a price channel? But here's an example, Checkpoint Software, which this week broke through resistance from March. You can see I've drawn that line in red, and therefore that breakout looks pretty good. The issue that I have is that this stock has been going up for 3 weeks. You can see back in early August, the stock bottomed at 65 and has been moving up ever since. What that means is that you have a large number of investors. I mean, this stock typically trades between 500,000 and 1 million shares a day, and you have all that volume over the last 3 weeks that is looking at a pretty good profit. And now that the stock has broken out, some of those people are going to be inclined to take that profit. The stock never really went sideways and built a base before it broke out. Instead, it trended up through that line of resistance, and that increases the chance that the stock will pull back before it goes into an upward trend. And so this is a healthy chart, but expect that in the very short term, you'll get a pullback before the stock goes higher. Now here's another example. RF Micro Devices broke through resistance at $12 on Friday, but it's still within that upward sloping price channel. Now I've drawn the horizontal line of resistance in red at $12. You can see that breakout there. But I've also drawn the upper envelope of the upward price channel in that upward sloping red line, which shows that this stock is probably going to stall around that $12.75 mark because it's getting a little bit overbought at that price level. So those are some of the things that I think about when I'm looking at breakouts. It's not the only things. There's many other factors to consider: the shape of the pattern, how long the pattern was building before the breakout, those sorts of things. But here at least is a couple of ideas to keep in mind. All right, let's take a look at the S&P 500, which is in one of those really solid upward sloping channels. And you can see that the channel continues upward. The market action this week moves to a new high, and it's still not at the top of that price channel. And so I think that this is a market that still has legs to the upside. We've flirted with the bottom of that upward sloping channel, the green line, a number of times in the last year and a half. And you can see that every time it bounces off of that. It did that at the start of August, and now that we are moving into September, although the market's a little bit overbought, it's really not super overbought because we're not at the top of that price channel. Here's the chart of the TSX 60, and you can see there also the market is at an upward sloping price channel. The market had a new closing high this week for the week, and it looks to me like the trend will continue higher. That doesn't mean that we can't get a week or two of weakness here, but until that upward trend line is violated, the long-term outlook remains positive. And really, given that we're not at resistance at the top of the price channel, the probability of it continuing to move higher is better than the probability of it moving lower. The TSX Venture started to get a little bit of a bid this week. You can see very slight upward move in the TSX Venture market with volume that was a little higher than normal. As we come out of the summer, those retail investors start coming back to the market, and these investors often like these smaller cap, micro cap even, TSX Venture companies. So I see this pattern building a nice optimism here, and I think that the fall could be actually very good for the TSX Venture. We just need to break through that red line of resistance that I've drawn on the chart for that to get going. The treasuries continue to really amaze many investors who can't make sense of why interest rates continue to go down, why the treasury market continues to go up. It's a little overbought now. We are at the top of that price channel. I've drawn that in red. And so I do think that we could see some profit taking in the US bond market in the next week or two, but the outlook is positive. Why? Because the bottoms are rising from left to right. It's that simple. US dollar broke through some resistance, but didn't do so from a really stable pattern. And so I think there is some potential for a little bit of a pullback in the US dollar in the short term. Big picture, although the US dollar has been on an upward trend for the last 2 months, big picture is it's still stuck inside this trading range that you see going back 3 years. And I think it's not necessarily going to go rocketing higher anytime soon. Could see some profit taking in the short term. Gold is in that pennant pattern. We've been talking about that for a number of weeks, and you can see that we are at the bottom portion of that pennant pattern where the market for gold should bounce. It actually closed above its open this week, and that implies that we could get a little bit of a move to the upside, but let's be reasonable here. The upside potential is pretty minor until we can break through that red line of resistance that I have drawn on the chart. So I call this really just a boring chart. Until we get a breakout one way or the other, I'm not too excited to trade gold in either direction. Oil has pulled back to the upward trend line. I've talked about that for a number of weeks, and this week it made a bounce. It didn't quite get down to the upward trend line, which means we could retest that line, but it does look to me like oil is at least going to be stable and holding that longer term rising bottom cycle that we have seen since 2012. And really, I think the bias is to the upside on oil, and we could see some support for some of those oil stocks that have seen profit taking in recent weeks. The fear index, the VXX, has pulled back to support and is holding that support. We've seen it tick a little bit higher. I think many investors going into the month of September are worried that we could see a correction. Really don't see any signs of that in equities, but this is a good hedge for any investor who wants to take away some of the risk of a correction, because of course if the market does correct, we should see the VXX move higher. So my outlook, bullish on stocks, both Canadian and US, getting a little bit overextended given that volume was light. I do think there is some potential for some profit taking to start the month of September, but certainly no signs of that going into Friday's close. Stocks were strong. Neutral on gold. It's a pretty boring market right now for gold, but it has some potential to make a break out of that pennant pattern, because anytime volatility gets low, you can get a good directional move out of that. Still no signs of that, however. Oil, I'm going to put a neutral rating on it. It has pulled back to support and should hold that support level, but it hasn't started to build any sort of rising bottoms on the short-term chart, the daily chart. And so a little bit of work to do before we can get short-term bullish on oil. Stocks continue to do well on that light summer volume. True test will come this month as volume gets back to normal. And there's really no sign of weakness yet, so no reason to think that the market can't continue higher. Oil has hit support and should bounce. Gold is pretty quiet, but still healthy long term, although I would say neutral in the medium term. The strength of the US dollar is a concern for those commodities, but we should see some profit taking in the US dollar, which may be supportive for oil. There is no fear in the market, but that can change very quickly, and so VXX is a good hedge for any investor portfolio. Well, that has been the Stockscores Market Minutes for August 29th, 2014. I hope you've all had a great summer. I'll be getting back to full-time trading next week. Trade well, and let's make it happen this fall.